Good afternoon, good evening, everybody. It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It's Tuesday, February 15th. I want to do a live stream today, and we're going to be discussing the stock HEXO Corp, and we're going to be discussing whether or not another reverse split is in the cards. They also released products this week in Quebec, so we'll discuss that. And we'll also be discussing the changes to the board of directors ahead of the AGM and the annual general meeting that's coming up on March 8th. So before we jump in, make sure to smash the like, subscribe to the channel, tick the bell, you'll be notified on any future updates. Going to give it another minute or so for people to join us, so just sit tight and we'll get started very soon. All right, everybody, welcome. I see we have some people joining us. Welcome. We're going to get started here in about 30 seconds. Just sit tight. We'll give it another few minutes for people to join us. Good afternoon, good evening, everybody. It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It's Tuesday, February 15th. Hope you're having an awesome day today. In today's video, we're going to be discussing, we've got quite a few things to go over, so I wanted to come on, do a live stream, start a discussion just to get a feel for how everybody else is feeling at the moment. I'm still sort of pondering a lot of the changes that have come down the pipeline with HEXO the last couple of days. We're going to be discussing some changes to the board. We're going to be discussing whether or not HEXO is going to be doing another reverse split, and also going to be discussing Quebec, Redecan launching in Quebec. So before we jump in, make sure to smash the like, subscribe to the channel, tick the bell, you'll be notified on any future updates. I've got a Bedfellows Indie Pal here to get me through this live stream. Absolutely recommend these, the new Bedfellows with Truss, the Molson Coors joint venture. They're fantastic. So just before we jump in, cheers to everybody who's joining the stream. I see we have quite a few people joining us. We're gonna get started here in a couple seconds. So we are seeing the stock price it didn't really respond negatively, I guess. Yesterday we were down over 11%, about 12%. Let me switch over to the desktop here and we'll get started. Once again, thanks everybody for joining us on the live stream today, and welcome back on the Pursuit of Wealth. So let's take a look at the MJ Biz daily article here. So MJ producer HEXO pitches stock consolidation to save NASDAQ listing. This is something that really caught me off guard. I didn't anticipate this coming. Let me know in the comments in the chat if you predicted this, if you thought that this was likely going to come in this AGM, this annual general meeting. I really didn't anticipate this whatsoever. If we look at Sundial, they got an extension, another 6 months from the NASDAQ. So if we just factor that in to say that HEXO could have potentially gotten an extension, that means that we could have potentially had until July 25th to be compliant, and then we could have received another 6 months extension, which means we would have had until about Christmas time in order to regain compliance. But one thing that they could be preparing for is a potential slide and collapse of the broader market. That's one thing that really stood out to me, was the fact that they are proposing a between 2 and 14 to 1 reverse split. It doesn't mean they're going to do a reverse split. It just means that the votes and the proxy is there, and that they're starting that process. So it's I think that's what didn't resonate very well with investors, was the fact that it was such a huge gap there all the way from 2 to 14, and they didn't really give us the option for that. So to vote, it's either all or nothing, essentially. So we'll go through that here in a moment. But I want to go over this MJ Biz Daily article. There's a lot of people saying that, I don't share the negative news. So this is definitely a bearish article, full disclosure. We'll go through this quickly here. So struggling Canadian MJ producer HEXO is asking shareholders the green light to reverse stock split in order to boost its shares and regain compliance with the NASDAQ's continued listing standards. Apologies, guys. I'm not sure what's going on outside. I think a kid's getting into trouble with his mother outside in my condo hallway. So apologies if you hear a kid screaming in the background. It doesn't sound like it's serious, but that's because there's a kid screaming in the background. So moving through this, getting back on my train of thought here. So Quebec-based HEXO Corp was notified by the stock exchange on January 25th. It was not compliant with the continued listing standard. Therefore, it's given a 180-day grace period, essentially, to regain compliance. We need to get 10 days trading above $1 in order to regain compliance. So shares of the company were trading approximately 64 cents on Monday afternoon. The share consolidation plan was disclosed Monday in a regulatory filing. HEXO is essentially seeking permission to reduce the number of shares by between half and 14 times. This isn't the first time this has happened with a licensed producer. We know that Aurora just went through a 12-to-1 reverse split as well. And like I said, that I think is what spooked a lot of people. Why is HEXO and myself included? Why is it such a big number, right? If that was just between half and maybe 4 or even 8, I could see a range of 2 to 8. And we know that they did a reverse split about a year and a half ago, and they reduced it from an 8-to-1 to a 4-to-1 because the stock price had skyrocketed, and they reduced that. So they had a little bit of leverage there to work with because they did decrease the previous reverse split that happened. So I think it would have resonated a lot better if they would have did between 2 and 8 reverse split. And then, like I said, if they did do another reverse split of even a 2-to-1, that'd basically be as if they just did the 8-to-1 and didn't reduce it a year and a half ago to 4-to-1. But I understand if they do another 4-to-1 or an 8-to-1, that's going to be a huge difference. But I don't think it's the end of the world. Really, a reverse split doesn't really change anything. It just decreases the amount of increases the share price and decreases the amount of shares. So for every 2 shares, you'll own half that share if it was a 2-to-1, and then the share price will double, right? Essentially. So it's just an accounting trick, but it's not all bad, really. But I think that we could organically get there just on its own with prospect of U.S. legalization, Safe Bank. We know there's some bills passing through the House for the 6th time. It got approved and headed to the Senate, so that we know that that's where the hurdle lies. So we'll see. We know that the Democrats control a majority of that, but we have Republicans now backing legalization and crafting their own bills as well. So like I said, I'm still undecided whether or not I'll vote against or for this. I was leaning to vote against, but now I'm starting to lean the other way, and I'm voting for. Just because we vote for doesn't mean they're going to do a 12 or a 14 to 1. I think most likely it'll be a 4-to-1 or an 8-to-1. Personally, I'd be okay with a 2-to-1 or a 4-to-1. Let me know in the comments below if you would be okay with a 2-to-1 or a 4-to-1. Do you think it's all nonsense? Let me know what you're going to be voting for or against. This is part of the reason why I wanted to come on and do a live stream as well, just to kind of get a feel for everybody's current thought process and just pick your brain a little bit. We can all kind of brainstorm on the best action for going forward. So like I said, I think a lot of the problem came after they put that number 14 in there, right? That's when people were like, okay, is HEXO not confident that they can organically get back onto the listing requirements and regain compliance organically? Or do they think that the MJ space is not going to reverse anytime soon? Do they think that the broader market is going to see a huge collapse? Which is all possible, right? We could easily pull back, another 10% on the S&P 500. We could easily enter a bear market. We could also see that U.S. legalization may not really gain any traction until next year, maybe even 2 years from now. So these are all things we need to be realistic with ourselves, right? And it's not exactly it's pretty smart actually on HEXO's behalf. So maybe they're just getting a feel for investor sentiment to see whether or not this is something that they could do in the future, or if people are completely opposing it. So it's not, just HEXO's confidence in themselves. It's also their confidence in the broader market. What happens if the S&P 500? We know that there's an everything bubble going on. It's possible MJ could outperform the broader market, yes, but at the same time, if we see a huge drop in the S&P 500, we have some geopolitical tensions with Russia and Ukraine. We've got interest rates. That is the new talk of the town. So if we were to easily enter a bear market, which could happen at some point, in my opinion, in the next few months, between the next 3 to 6 months, I think, in the broader market, this could just be HEXO positioning itself in case of that event, right? And a reverse split isn't all bad, right? But the last time we did a reverse split, like I said, we went from 8 to 1 to 4 to 1, and the stock shot up from about $2 all the way to $11 USD, right? So we went up last time, and then the whole industry went into a brutal 12-month bear market. So I wouldn't say that the reverse split caused us to fade that whole move back, right? If HEXO, didn't see that huge run up and the whole sector didn't completely nosedive and enter a brutal 12-month bear market, I would say, okay, maybe it's something to do with HEXO, but it's just par for the course at the moment. And it goes on to basically say that, they're not the only one having issues. The filing also states the board could elect not to proceed with the consolidation, even if it is approved. So even if everybody votes for it, it doesn't mean that it's a shoo-in, right? That just means that they have the option, but they may not even go ahead with it, right? So it could just be a gauge as well to kind of get an investor sentiment with regards to the whole thing. In January 25th, the warning NASDAQ gave HEXO 180 calendar days until July 25th to regain compliance. If the NASDAQ traded shares do not rise to $1 for a minimum of 10 consecutive business days before that date, the company could be eligible for additional time. And this is the part that really confused me and why I didn't see this coming. They could be eligible for additional time to regain compliance if it meets the NASDAQ's other initial listing standards. So there's more than, a lot of people think it's just $1. There's more that goes into it. It has to do with the amount of shares. So you can go just Google the NASDAQ listing requirements. So this is just one aspect of that, but save for the $1 per share requirement. So that's just one of many factors in that list of criteria that has to be met. The board determined that it is in the best interest of the corporation to obtain shareholder approval at the meeting to implement the consolidation according to the HEXO filing. So again, this could just be them, preparing for what happens if the broader market does. We've got these tensions with Russia and Ukraine and the interest rate hikes and the potential that the broader market could roll over. The S&P 500 is not in a weekly downtrend yet. If we were to lose 420 from here on SPY, that would indicate a weekly downtrend, and we could easily see fear pick back up in the markets, which would obviously more than likely hurt MJ. So these are all things that we have to be real with ourselves, right? These are all factors that play into this over the next few months, and this could just be them sort of laying a safety net in case that the broader market does see a big collapse. The corporation cannot offer and is not offering any assurances that the consolidation, if implemented, will ultimately result in the corporation regaining compliance with the minimum share price. Let's just move on here. This is the second time HEXO has come under pressure from American Stock Exchange over its low stock price. But again, they didn't mention. It just seems like it's a very bear biased article. They didn't mention that HEXO also reduced from an 8 to 1 to 4 to 1 because their stock price had soared, 500%. So they didn't leave that. They didn't fail to, or they failed to mention that. And then in 2020, the New York Stock Exchange warned HEXO that if its shares had fallen below $1, the Quebec company subsequently consolidated its shares and maintained the listing. 6 months later, HEXO announced plans to jump to the NASDAQ, which has lower listing fees. As we know, a lot of companies are cutting down on costs and being more cognizant of that. ATB Capital Market estimates that HEXO's debt stands around $402 million. At least 3 other Canadian cannabis businesses are currently offside the NASDAQ's continued listing standards. So again, if it was just HEXO, I'd be a little bit worried here. But Kronos Group, Neptune Wellness Solutions, and Sundial Growers are all at risk of being delisted as well and could see a reverse split. I think Auxly, although Auxly, albeit they've had a huge, I think about 60%, 50% bounce over the last couple of days since I did a video on it as well. But they could potentially do a reverse split in order to upgrade to a U.S. major exchange. We could also see Canara Biotech. So it's not the only company. Like I said, if HEXO was the only company right now that was having this problem, I'd be a little concerned. but it really is just the environment and the landscape in the MJ space at the moment. We know that we've been in a brutal bear market, and with these cannabis companies, especially LPs, it takes a while for us to really see any profitability because of the fact that Canada went from nothing to servicing all of Canada, whereas multi-state operators, MSOs, they're going state by state by state, and then once it legalizes, they'll have that foundation, and they'll have that supply chain, they'll have that groundwork already laid out. Whereas in Canada, they went from selling no products to servicing the entire country. So there's definitely some pains right now for LPs, but I do not think that the business model. We've been talking about this to private POW group members in the chat room today. How we didn't think that the business model of the U.S. MSOs was sustainable just because of how insanely high the prices were. I seen a receipt from one of the purchases at one of the dispensaries in the U.S. and it's just I could get. It would cost me less than half of that dollar value here in Canada to get the same amount of those products, right? So I don't think it's kind of reminiscent of what happened in the Canadian market when it first started to roll out, right? So I don't think that's sustainable, and I think LPs. I think the days of unprofitable LPs are numbered. That's why we're seeing a lot of LPs switch to a more cost-cutting initiative and focus. And like I said, I think that LPs offer a lot of upside here if we can just get through. Not everybody's going to make it. There's going to be a lot of companies that do not succeed. But again, there's lots of opportunities right now in the space. In other news, Can Beverages, they are an MJ infused social tonic company, and they also had a deal with GTII. So that was to service the California market. And this is a deal that just came out. This was announced today, February 15th. A lot of people probably didn't see this coming, but there was some speculation in the community wondering if there would ever be a merger between GTII and Green Thumb and HEXO. I don't think that would ever happen, and likely isn't even possible right now, right? If we can't enter the U.S. if HEXO is listed on the NASDAQ or the NYSE, they can't have operations in the U.S. It may be through some sort of SPV, special purpose vehicle, or a JV, a joint venture. That's a possibility as well. We know that Tilray has some options in MedMen. If U.S. legalization does start to accelerate, and we know that Canopy has a potential stake in Acreage as well upon federal the end of federal prohibition, right? So there's lots of opportunities right now, but this is something I think that a lot of people didn't see coming. But essentially, as of today, Ontarians, and anybody in Ontario, I think it is, correct me if I'm wrong, I'm pretty sure that's what it said, was essentially that anybody in Ontario can now purchase these canned beverages, which in Canada is now a partnership formed between Truss Beverage Co. So let me just find that part here. Where is it? Truss. So Can is partnering with Truss Beverage Co., a joint venture between Molson Coors Canada and HEXO, and a leader in the development of cannabis-infused beverages for the Canadian market. So again, this is something that I don't think anybody was really anticipating, and we still yet to see any updates on the SPV, the special purpose vehicle for the Readies and the gel caps that we knew was likely going to be coming in the first quarter of 2022. So I think that's something that we could see as well with entry, which would give us entry into the California market. So that, like I said, this is a great partnership between Can and Truss, and something that I think a lot of people didn't see coming. Also, in other news, Redecan is now listed on the SQDC. It was out of stock, meaning that it could likely, we were hearing rumors that it could be available on the SQDC as early as this week. So essentially they have 3 new flowers, one of which is the black cherry punch that I have up here, and also gel caps coming to Quebec. So this is something I think a lot of people are sleeping on as well, is how huge of a deal this is, and the potential for HEXO. Obviously, they're going to have to build the Redecan brand in Quebec, but with how popular it is across the country and how familiar people are with HEXO, most people, I would think, would know that Redecan and HEXO are sort of married together, right? So I don't think it will take as long as most brands who are just starting from the ground up. HEXO is the number 1 market share in Quebec, so I think it'll be a lot quicker to establish that brand recognition. But like I said, great that we have 3 new flowers entering the SQDC and gel caps. And also a whole new category that they're getting into is the Redibles. So the Redecan edibles, which they now have cola, the orange soda, and the root beer. There was also sour watermelon or something like that, but they don't have it listed here on their website. So it appears that those are just offered in Ontario at the moment, hearing nothing but great things about them. A few POW group members were posting about it, or maybe it was just Grayman, one of our members. I know for sure he picked some up. He said that the root beer were his favorites so far. I looked in Alberta. I haven't been able to find them anywhere, and they're not even on the order list according to their general managers and their store managers. So it's probably going to be another 2 to 4 weeks at least before we see them here on the western coast of Canada. But just taking a look at the HEXO after hours price, we were up to 66 after hours. So again, not really seeing any negative impact coming as a result of this news that just came out. We haven't even seen an official press release either from HEXO on this, which was regarding the proxy vote for the reverse split. There's some new nominations and changes to the board of directors, also upping the board of directors from 10 to 5. So I wanted to just show everybody how to go through. A lot of people were saying, how did you find this information out? There wasn't any press releases. Well, the MJ Biz Daily article came out shortly after, but usually the documents arrive on SEDAR first. So if you just go to HEXO's website under investors, they have the SEDAR filing link there, and then you can bring it up here. But essentially the one of importance here was this form of proxy, and that came out yesterday. And generally they come out around the first of the week. Monday's usually a pretty standard day for that to come out. But essentially you can go on here, and this is the page here. So see voting guidelines on the reverse, and it goes through, I won't read through everything, but like I said, just what I mentioned. They have the new election of directors. They also want to appointment of an auditor, change of registered office municipality. They want to increase the maximum number of directors, like I said, from 10 to 12, the share consolidation, and the omnibus long-term incentive plan. So has to do with to consider and thought advisable pass an ordinary resolution to the full text of which is set forth in the circular approving and unallocated awards under the corporation's amended and restated omnibus long-term incentive plan. Yeah, so this isn't something that we really discussed, but not previous grants of certain awards. So likely has to do with like options and incentive plans for management and things like that, the executive team. So the things that I want to go over here are the board of directors, the share consolidation. I'm indifferent really with regards to the board of directors. If they want to up it to 12, I'll probably vote for. That's generally a typical number for a board of directors, between 10 and 12. But yeah, taking a look at the election of directors. So John K. Bell, who is the chair at the moment. We've got Scott Cooper, Rosemary Gage, Lauren Chung, Helen Fortin, Brad Kotush, Peter Stringham. So those are all new. So Lauren Chung, I was looking at her profile, and it looks like she worked for Thomson Reuters. Helen Fortin, I didn't see anything on Helen. If anybody has come across anything with regards to Helen or Ellen, if you can let me know in the comments, that'd be great. Brad Kotush, I believe he worked for Canaccord Genuity. And then Peter Stringham had worked at HSBC previously. So we've got some financial background there. We've got the Montours obviously staying on the board. So they have a lot of the MJ experience. Scott Cooper has the CPG background, CEO of Truss, now CEO of HEXO. John K. Bell had worked for Canopy Growth. So he's got some experience there as well. And one thing you'll note here, Emilio Imbriglio is no longer on the board. So we'll just go over here to About Management. Adam Myron is no longer on the board either. If you're wondering why Adam, the co-founder of the company, is no longer on the board, he's now the CEO of Brain Capital, which is a crypto company that's offering custodial services for crypto and big institutions. So he's now the CEO of that. So likely just moving on. I don't think it was any bad bridges or anything like that that were burned. There was also some stuff going online, some chatter going around about SSL. So Sebastian St. Louis, it did say that there was a notice of terminations, and a lot of people thought that SSL had resigned, but I don't think that was the case. I kind of assumed that they had a falling out, and he was essentially terminated without cause. But that was pretty evident, I thought, because he was just immediately removed from the company, no longer on the board of directors. So they must have had some sort of falling out. Still pondering that. I think that SSL, could be back at some point in the future, maybe. I wouldn't be completely opposed to that. I'd like to see him back on the board of directors at some point, but again, we just don't know. Hopefully I can get an interview with him at some point in the future. That'd be absolutely fantastic. If you are listening to this, SSL, info@pursuitofwealthgroup.com. Get in touch with me. Love to schedule an interview at some point in the future. Might be a little too soon though. We'll see. Definitely one of the great visionaries of the space, and mad respect for SSL. But like I said, Adam Myron now stepping down from the board of directors, it looks like, focusing on Brain Capital. We've got John K. Bell, like I mentioned. Vincent Chiara has now been removed as well. So I know a lot of people were very adamant that he get removed. So apparently HEXO was listening. So he is no longer elected on the board. Emilio Imbriglio, like I said, is no longer there as well. Roach is stepping down. Curtis Solvig wasn't mentioned on there. Valerie wasn't mentioned. Guillaume, that was the executive team. So none of them, actually Roach, I think, is no longer with the company. And he was the head of legal team. So it's going to be, and we know that they're searching for a new permanent CFO. So a lot of restructuring and just monumental change going on at HEXO right now. So obviously not signs of a great company in the short term. The long term looks great, but not downplaying the fact that HEXO has a lot of challenges. And they've been going through this monumental change. We know that they have the path forward. They're looking to cut costs by 30%. So they're definitely not sitting idle doing nothing. They're really shaking things up. And if we just go back to that form here, just bring it up. We had HSBC background, we had Canaccord. So right now that's 1, 2, 3, 4, 5, 6, 7, 8, 9 nominations that they have for election of directors. So one thing I noticed as well is they're looking at increasing it from 10 to 12, but we only have 9 there. So wondering if we may see some other people get elected to that as well. But let's just move on here. So share consolidation. Like I said, not 100% sure if I'm going to vote for or against this just yet. Like I said, I would be okay with a 2-to-1 or a 4-to-1, but I'm not sure whether or not I'll vote for or against that just yet because, like I said, that 14 I think is what's really not sitting well with investors, and myself included. I'm not sure I want to give them the power to do that. But like I said, even if we do vote for it and everybody votes for, the management still has the right to not proceed with that share consolidation. So we'll move on. I'll take a look at the HEXO chart here as well before we jump into the chat. So like I said, no major red flags right now. We're still holding daily EMA 12, and we've been rejecting at the daily EMAs really since we lost it back here at $7.55 USD. We got above it here, back on that weekly bounce up to $1.88. And then here we are, we've been rejecting EMA 12. And then EMA 26, we finally got above it. But then, like I said, more than likely going to expect daily consolidation. A lot of our names saw daily consolidation across the board, and HEXO did as well. So then we formed the daily high or low. We broke resistance here at 69 cents. We hit a high of 75 cents after hours last Friday, I believe it was. So we are in a daily uptrend. So as long as 57 cents holds USD, the daily uptrend remains intact. And we could see an EMA 12 and 26 bull cross. But look at how long it took for us to get over the EMAs. And when we did get above the EMAs, we were just knocked right back down, bull trap into a new lower low. The difference is this time we're starting to see volume pick up, and we've now been above EMA 12 for 14 days and 10 trading days in a row. So you can see here we're holding daily EMA 12 again today. We even closed right on it yesterday with a bit of a lower wick. So like I said, as long as bulls maintain that 57 cent level, maybe you're looking at potentially setting a stop loss, or maybe you're looking to take a position. Maybe you're a bit more conservative and you're saying, okay, I want to take a position in HEXO. There's obviously, some things to be aware of. There's some risks at play. They have the reverse split coming up potentially. They have the possibility that they're going to raise. I always said that I could expect one more raise from them, and that could potentially happen at some point this year. We know that their debt is over 400 million at the moment, and their cash position is dwindling. So that's something that we can expect as a potential raise. But again, I wasn't really anticipating the reverse split. I figured that they had enough time to get that done organically, and maybe even get an extension, right? But it could just be them playing the safe card. I'm not 100% sure what their motive is behind that 2 and 14. I was just as thrown off by that. But again, just taking a look at the chart, there's no major red flags here at the moment. We're still in a daily uptrend. CGC, daily consolidation yesterday and a daily inside bar and tightening range today. So still in a daily uptrend. We're going to be watching CGC and Tilray very closely. We know that the S&P 500 had a strong day today as well. And we could see further upside, in my opinion, in the broader market, which we've been very correlated to the broader market in MJ, which is great to see. And like I said, a lot of our names still holding their daily uptrends. And yesterday, yes, we did pull back on HEXO from the highs about 13.5%. But overall, no chart damage was done. We're still maintaining the daily uptrend. And what we need to see is a weekly uptrend confirm. And I'll just extrapolate this here for everybody to see. So we are bouncing here on the weekly. What we want to see is as big of a bounce as possible. And then once we do top out, we can form that higher low and then bounce into a higher high, change that weekly trend. We need to see weekly trend changes across the board. Even on CGC, we've yet to confirm a weekly uptrend, and a lot of our names, including Tilray. But now we've got a lot of room when we do top out on these bounces to form that weekly higher low and attempt a weekly trend change. We know that we're not going to have absolute confidence in the bottom being set across the sector until the weekly and monthly trend changes back to the bulls. In terms of the weekly moving average, we are hovering right on that 10-week moving average, which is sitting at 67 cents USD. The stochastic and the MACD are bullish and starting to gain some momentum in those indicators. But again, we're back under that 10-week moving average. A little bit concerning in terms of the weekly moving averages. We have no nearby resistance all the way up until the $3 range. So not really much clues there. But the 50-day moving average has been rejecting the price again as well since 755 USD. Since we lost those daily moving averages, we rejected it here, like I said, back on that weekly bounce up to $1.88. And then here we are again, rejecting pretty much to the penny off of that 50-day moving average. So what bulls want to see is this daily higher low, maintain the daily uptrend, and then see a convincing break over that 50-day moving average, which is sitting at 71 cents. If we can get over 71 cents, we could easily see a move back up to $1, and then no resistance on the 100-day moving average until $1.14. So we're starting to see some signs of life in the weekly chart, but like I said, could see a bit more downside here in the short term, and we're going to be watching the overall sector, and we're going to be watching CGC, the biggest market cap company in the space, as the direction on what to expect going forward. So pretty much going to end it there in terms of the technical analysis. We'll open it up for some questions, and we'll have a discussion here with regards to what everybody thinks pertaining to the reverse split, the new board of directors. So yeah, if anybody has any questions, now would be the time to drop them in the comments below. I see we have quite a few people online here today. So thanks for tuning in. Taking a look at the questions here. Let's go. You bet. Danny Yo-Yo, if Sundial passes HEXO and share price, I'm going to be confused. Yeah, I was actually looking at that today. Pretty mind-boggling. And HEXO actually we're expecting about 60 million in terms of net revenue for the quarter coming up here in about a month for Q2, which ended December 31st. Something to keep in mind, we were discussing this as well today in the Power Group private chat room, that the readies, we probably didn't see an accurate number of, because if you recall last quarter, everybody was really, really bullish, thought we were going to far exceed expectations and the estimates in terms of revenue, but it actually ended up having a miss. And I think that had to do with the fact that, let's just bring it up here actually. I think that had to do with the fact that they were changing the the readies from 0.35 grams to 0.4 grams in each ready. And also they were adding new strains and they were getting rid of a lot of different strains. The Alberta website as well, AGLC, to order MJ online is being decommissioned. So that may have hurt sales while they turned that over to retail. They're going to let retail handle that. But if we just take a look here, and if anybody's ever wondering as well, you can just go to investing.com. This is where I use my forecasting for a lot of the stocks. I find them to be the best in terms of accuracy. But if we just take a look at the financials here for HEXO from the last quarter, like I said, we had a slight miss. We were anticipating 53 million, and it came in just under 50 million. So a pretty big miss in terms of revenue. When everybody was thinking we were going to see, 60 to, I think I even saw upwards of 80 million. But we're forecasting 59.59 million. So keep in mind that the Redecan, I think we started to see those new 0.4 gram pre-rolls in November, mid-November to late November. So we should have a month or a month and a half or so of the new readies. We know that Readies launched the King Pack as well, which basically is an ounce in pre-rolls. So 7 packs of 10, so 70 Readies at 0.4 grams. And they also introduced some new strains like the Lilac Diesel. So these are all things that I think are going to help us rebound. And we know that they launched edibles, the Redecan Redibles in Ontario. And they're also entering Quebec this week with 3 flowers and gel caps. So that's going to really be huge going into the next couple of quarters. I think the next couple of quarters are going to really, HEXO is really going to shine. But I think we could come in at around 61 million. I think I could see a slight beat in terms of revenue this quarter. And if we come in at over 60 million, we're going to pass Aurora. Aurora came in at 60 million. So that would be something. I don't think that's really going to carry a whole lot of weight because not too many people use Aurora as a benchmark anymore, or not that many people are even following Aurora anymore because of just the brutal slide it's been on. But like I said, HEXO is not the only one to go through these reverse splits. Like I said, even last year they reduced from an 8-to-1 to a 4-to-1. We know that Aurora just did a 12-to-1 reverse split. So again, even if they did do another 2-to-1 or a 4-to-1, I'd be okay with that. I don't think it'd be the end of the world, and HEXO certainly won't be the first and certainly won't be the last to do it in the space, in my opinion. But I agree, it's pretty astonishing to see the same share price as Sundial. But like I said, HEXO's not perfect, right? We've got some things. I think there's more positives than there's more pros than cons, and I'm staying the course. I'm still, I'm still staying true to my investment. I'm going to let it mature. Like I said, there's obviously some concerns, but this is nothing really that should come as a surprise when we break it down, right? We knew that they were going to be funding $400 million worth of cash for Redecan. Everybody and their dog was bullish when they announced the Redecan deal, but it seemed like people forgot that, we don't have the cash in reserves, so we didn't have that expectation that there was going to be dilution and debt. So I think this is just a great learning opportunity as well for everybody listening to my voice, and myself included, right? There's so much to learn in the markets, and the more eyes we have on the market, the better. Do you think it will pass the reverse split? Like I said, I was leaning no, and now I'm leaning to voting yes, just because everybody votes for. If the majority vote for, it doesn't mean that they're actually even going to go through with it. It just means that they could, and they have the ability from anywhere from 2 to 14. Like I said, if it was from 2 to 8, I probably 100% would vote for. But if it was, the fact that it's all the way up to that huge range to 14, that's where I'm a little undecided at the moment. But again, I'll keep everybody posted. I'm leaning to voting for. I don't think it's the end of the world. But good question, Claudio. I'll keep you posted on that. I don't think it will pass. Investors are fed up with dilution. Well, like I said, I've been calling reverse split doesn't necessarily mean dilution, but we could be heading that way too, right? Like I've said in my videos for many months now, I've been saying for months that I could see one more raise by HEXO. We're now, I think, at a little over 400 million shares in the outstanding shares. So we could potentially raise 1, maybe 2 more times. But again, there's a lot of things to be, you can easily get caught up in the FUD and the media and the narratives. But the thing is what the media loves to do is they love to paint a bearish picture when everything's in the dumps, right? But what were they doing? What were all the mainstream media doing back in February of last year? They were justifying how HEXO was going to $100 a share and maybe even as high as $200 a share. Why were they telling us that when everything was at an all-time high, or some companies were at an all-time high, and we saw huge moves in the 52-week highs on a lot of our names? That's just because of the narrative, right? And a lot of these media companies are controlled by the big financial institutions and the market makers, and it's the narrative. They're just like, there's so many things in this article that they just jump to conclusions, and they didn't, like I said, they didn't say that HEXO reduced it from an 8-to-1 last year from a 4-to-1. It's just all bearish bias. And, you got all the different types of analysts and writers, but Matt Lamers is a pretty credible source. Been following him. We know HEXO, he did a post. HEXO has #1 market share now in 4 provinces, which are Ontario, BC, Alberta, and Saskatchewan. We know that HEXO also has #1 market share in Quebec. So that would mean that they're #1 in 5 provinces. And now they're getting into the edible space. They're increasing their flour. Their quality of their flour and their output of their flour and their pre-rolls. So I think they're doing everything that they need to do at this point. And it's unfortunate that the space is where it is. No one could have anticipated this 12-month bear market that happened, HEXO included. But yeah, I'd say it's 50-50. It has about a 50-50 chance of getting past, in my opinion. And again, I'm very undecided whether or not I will vote for or against, but I'll keep everybody posted. But yeah, like I said, the dilution, I think, was inevitable, really. I mean, if they pay $400 million for Redecan and they need to come up with that cash, they're either going to have to dilute or take on some debt, right? But that's something that everybody can keep in mind for the future as well. If you see other deals in the MJ space and you notice that there's a huge cash component to that deal, the first thing you should do is go look at the cash and cash equivalents on these companies' balance sheet and use this as a learning opportunity, right? You can sit here, we can all point the finger at HEXO and say, oh, HEXO's been destroying shareholder value. But if you sold back in February last year and now you're rebuying, you're pretty happy. And look at how much of the market makers and the financial institutions made off that run up into February, and then getting everybody to, FOMO in, and, everybody and their dog thought we were going to $100 on every ticker, and then we went into a brutal bear market, which that these financial institutions were shorting. And now a lot of them are likely switching long. And that's why we're seeing this huge narrative and bearish bias from the mainstream media, is because when we start to see financial institutions and whales loading up, that's when the media is bearish and very, very FUD driven, right? There's so much fear, uncertainty, and doubt. And then when the market is euphoric and where everybody's feeling good about MJ again, that's when they start pumping you with, oh, there's never going to be another dip. HEXO's going to 100 before it goes back to 10, and they're just feeding everybody. They're trying to turn everybody into a bull, and they're getting everybody to buy their expensive shares. And then that's when we see a turnover. And then again, nearing the temporary bottom of that cycle, they'll start to shift the narrative back to bearish because they want everybody to sell them their cheap shares, right? Just remember, everybody that's selling shares here or is thinking of selling, somebody is buying those shares from you. So they clearly are not buying it from you because they think that it's going down. And there is a lot of short interest right now in HEXO. I think there was the short interest borrow fee was I think it was at 57%, which was absolutely massive. A lot of short interest, but Contrarian might look at that and say, okay, well, that might actually potentially create a little bit of a short squeeze. We could see a huge spike and short covering, and we start to see any kind of news, especially would obviously spike a huge short squeeze, in my opinion. But it is what it is, right? The dilution, like I said, I've been calling for more dilution for the last few months. I said that it was always a possibility before we know it's going to be a couple of quarters before we have EPS positive, right? So until we are profitable, Even BNN Bloomberg said that HEXO was likely going to turn a profit sometime in 2022, while a lot of the other tier one names like Canopy could be 2023 or maybe even 2024. So if we know that this year might be the year that HEXO turns profitable, well then again, this is something we need to factor in and be aware that there could be another round of dilution. The share price will go back up on its own. For sure, Claudio, but again, no one really knows, right? I bet you HEXO is probably saying, oh, I wish we didn't do that 8-to-1, or I wish we just would have did the 8-to-1 and not reduce it to 4-to-1, because when they were doing the share price reversal, the reverse split back in October of 2020, that's when they reduced it because the share price, everything just skyrocketed because the Dems were starting to gain control of the Senate and everything was starting to look a lot better, and the share price started to skyrocket. So I bet you they're thinking, well, man, we should have just did the 8-to-1. We shouldn't have reduced it to the 4-to-1. Now we've got, now we have to go back to potentially a reverse split again. But again, I think a lot of people aren't really, they're forgetting that part as well, is that HEXO did reduce it from an 8-to-1 to a 4-to-1. And yeah, they don't have a crystal ball either. Again, I'm not making excuses for them. I'm just saying I think they probably wish that they could go back in time and just leave it at the 8-to-1 versus the 4-to-1. But they also might just be concerned about the U.S. landscape and possibility of U.S. legalization. Maybe they know something that we don't. Maybe they think it's going to be another year or two before we see any positive catalysts from U.S. legalization and the Safe Banking Act. Maybe they think that the overall stock market is going to plunge and collapse and see a huge drop in bear market beginning. And if that were to happen, this might not be a terrible move on HEXO's part. Again, the share price, in my opinion, will rise organically. Like I said, we're starting to see some signs of life in the sector, but it could just be them playing it safe, right? Anything can happen. The only guarantee is nothing is guaranteed, right, in the stock market. So you kind of have to just try to keep their emotions out of it and try to think. That's one thing I try to do, is put myself in HEXO's shoes. Okay, well, why would they put 14 there? Are they not confident in their own ability and their sales over the next few months? Are they not confident in the U.S. legalization progress? Are they not confident in the broader market? There's so many things that could be underlying there that we kind of need to read between the lines. But we haven't seen that official confirmation from HEXO yet. We didn't see the official PR news release, so that's something that we'll want to see from them as well. I want to see, some talking points with regards to their new board of directors that they're electing and the changes made to the board of directors. Maybe a little bit more insight onto why they chose that number 14 in that reverse split. I think a lot of that's going to go a long way. We should see that at some point soon. So what's going on, split or not? We don't know. I think it's probably going to be, Zeke, it's probably going to be 50-50 at this point, whether or not it goes through. Even if it does get passed and people vote on it and the majority vote for it, it says that that management, the board of directors, have the ability to not even go through with it. So even if everybody does vote for it, they still might not proceed with the share consolidation. So even if it does get approved in the AGM, the annual general meeting, that doesn't mean that it's 100% going to happen. And like I said, it could be a 2-to-1 reverse split. It could be a 14-to-1. We don't know. It's a big range. Could be a 4-to-1. SNDL has close to 1 billion shares, and they're not talking about a reverse split. Well, they did get that extension, Claudio, and again, maybe HEXO is just looking at the market landscape and they're not 100% sure with the rising interest rates, geopolitical tensions across the EU and Russia. It's really hard to predict anything at the moment, right? The market is MJ going to outperform the broader market? Obviously, if the S&P 500 were to crater tomorrow, that's probably going to crater MJ, at least in the short term, but MJ may start to outperform. Again, this is all we know that there's talks about COVID potentially being prevented and cured by CBD. These are all things that could spark a catalyst and a bull rally, but we just don't know yet. Well, we don't have enough data in the charts. We have daily uptrends, but we need weekly uptrends across the sector, which we've yet to do. So in my opinion, I think it's a 50-50% chance the split gets approved. But then even if it does get approved, that doesn't mean that management and the board is going to go ahead with it. So we probably won't find out. If you're wondering when we're going to find out about the reverse split, whether or not it's going through and what the ratio is going to be, it's probably not going to be for another 4 to 6 weeks, I would think, in my opinion. About time for change. Yeah, so they're obviously going through monumental change. The definition of insanity is doing the same things over and over again and expecting a different result. So HEXO looks completely different today than it did even a few months ago. And we know that change was necessary, and we've got it. And we've got a plan ahead. We've got edibles now into Ontario. We've got Redecan launching 3 new flowers and gel caps into Quebec. We know that we're working on a potential SPV, special purpose vehicle, for entries into the California market with the Ready products and the gel caps there. We've got New York recreational coming online at some point this year, I would think. And then Truss expanding to 17 states. We have that new Truss partnership with Can Beverages. There's a lot going on. We know that the Fortune 200 partner is signed and that production is currently ongoing, and they're working on the product lineup and the portfolio there. So there's so much potential. Just obviously this debt and the debt and the cash position is the question mark, right? And a lot of people may just be sitting on the sidelines because of that, and you wouldn't be wrong in doing so. It's just different strokes for different folks. So if you're waiting for weekly uptrends, okay, well, maybe I'm going to sit out. Maybe this debt and this cash position is getting a little bit too much for me. Maybe I need to take some money off the table. Maybe another option. This isn't telling you to buy, sell, or hold. This is for entertainment purposes only. If you have any doubts right now, what I would probably tell you to do is to consider selling half your position, or maybe you sell half your position in HEXO if we lose the daily uptrend. So if we lose 57 cents USD, and then maybe you look to reload cheaper. That way you're right either way, right? If it keeps going up, you still have half your position. If it goes down, you're able to reload cheaper, right? Or maybe you're completely out of HEXO until this debt gets debt gets resolved, or the cash reserves get resolved. So that's completely understandable. Personally, I'm staying the course. I've got an average now of about $2 Canadian, and I'm holding. I've made my decisions. I've done my research. This is what media loves to do. Like I said, they did the same thing with Tesla. They did the same thing with Amazon. Amazon fell 95% in the .com days, and then look what happened, right? So there's opportunities. That doesn't mean that they didn't come with their risks. A lot of people said that these .com companies were going to go to the way of the dodo. They were not going to amount to anything. Why do we need the internet for things, right? And there was a lot of uncertainty back at that time. I mean, obviously, looking back now, we're like, oh my God, like Tesla and Amazon are nothing compared to HEXO. Like, obviously, they were great investments, but that's probably not what people were thinking when it was down 95% in 2001 after the .com bubble, right? When Amazon was down 95%, I bet you there was a lot of people saying, I'm going to sit out on the sidelines. This is too risky for me. And they didn't have, any real sales or any money in the bank. So any new industry or technology, especially the ones that are in leading market share or have the highest potential, no pun intended. HEXO, number 1 in market share. I think just like many other people have said, Scott Cooper, you can tell just the amount of analysts that are covering HEXO. You can tell there's a lot of interest in HEXO. And again, I placed my bets. It's an educated, investment. I'm not just only investing in HEXO. I have multiple other Canadian LPs and MSOs. I have ETFs as well. Not just invested in the MJ space, right? I'm also talking to a company right now about a private placement in distribution services and things like that. So selling products to different picks and shovels, I guess you could call it, in the space, right? And there's so many different ways to invest in MJ without investing in companies that actually deal with the plant, right? So again, maybe you want to sell half your position in HEXO. Again, not telling you to do it. This is just what I would do if I were somebody who was thinking, if you're a little worried about your position, maybe if we lose the daily uptrend on HEXO, maybe just set an alert right here at 57 cents. You can do it on on a lot of different platforms. You can just go here, add an alert if the price drops, or you can set a stop loss if we drop to below 57 USD, or if we go over to HEXO on the TSX. And that was something too today. The share price was up over 6% on the TSX today. So we're going to see whether or not we see that arbitrage opportunity and follow through here tomorrow. Maybe we see the US side outperform the Canadian side. But like I said, if we lose the daily uptrend, which would be a loss of 73 cents. So maybe you want to exit your position, half your position. If we lose 73 cents and then look to reload cheaper, maybe as low as 60 cents, maybe around 65 cents. That way you're right either way, right? If we do keep falling, or maybe you're just looking to take some off the table. If you're worried about your investment, then there's a good chance that you either went a little too heavy, you broke the golden rule, you invested a little bit more than you were willing to lose. But that's something that you could do. Like I said, there's definitely risks involved. But with everything that I know and everything that I've seen and that I continue to see and what's on the horizon, I'd be more uncomfortable not owning HEXO than I would owning HEXO. That's just me. But personally, HEXO could go to zero tomorrow, right? And I'd be fine. I've got my cryptocurrency investments. I've got more money in crypto than I have in MJ. I've got other licensed producers. I mean, I'm not telling everybody to have this mindset with every investment. I've done my research. I know what I hold. And I see way more positive catalysts than I see negative. And I own real estate. I have a bunch of cash in the bank. So if HEXO were to drop from here, I could dollar cost average down. I obviously entered HEXO just like a lot of people. I was starting to sell back into last year when we had that huge run up to $11 and $14 on the Canadian side. I was starting to sell here when we had started to reverse on those macro level trends. We're changing weekly downtrends. So like I said, when we lost $5, that was another opportunity as well to reload cheaper. And we had that cup and handle that failed here as well. So double top at 913, that was a clear double top and cup and handle fail. That you could have exited there on that double top. You could have exited when we lost the handle on the cup and handle. We could have entered. You could have exited your position when we confirmed daily and weekly downtrends after that huge run up that we knew was likely going to see some consolidation at some point. We went all the way from $3 to $14, almost 4x in just a couple of months, right? So we knew that there was likely going to be a 10, 20, maybe even 40% pullback, but no one could have known that we were going to enter this huge, brutal bear market. And like I said, there was plenty of opportunities to load up and exit and load up cheaper on HEXO. I know a lot of people may have, averages in the 10s or even in the 20s. I've heard some people say that they have an average of about $30, which is, unfortunate. I feel for those people, but, a lot of that goes into knowing where we are in a cycle, right? If you knew nothing about charting and technical analysis and cycles and uptrends and downtrends, if you just buy when we're getting close to weekly oversold on the RSI and sell when we're getting close to overbought, so this line here being oversold, this line being overbought, if you just went off of that alone, you'd be probably more successful than about 90% of investors out there. It's just hard for people to buy when we're weekly oversold like this on a lot of these names because the media is just so bearish, right? And it's making people uncomfortable. They've got the Hell's Angels FUD that we knew amounted to absolutely nothing. You just got to kind of ask yourself, right? Like, why does all that happen when we're at 52-week lows and all-time lows in the sector? And it's not just, I'm in multiple groups and multiple people talking about Oxley. The other day I invested in a stock that only goes down. Basically sounded like HEXO, people who lost money in HEXO or say they lost money. You never lose until you sell. But, doesn't matter if you're looking at an Oxley investor or a Sundial investor or a HEXO investor. I even seen people talking about Tilray, just super disgusted with Tilray. A bunch of crooks, this should be illegal. And then people saying, what Canopy's doing should be illegal. And if you're wondering why me and why a HEXO, guys, just understand that this is happening everywhere in the MJ space, right? US MJ holding up a little bit better right now, but again, the LPs have a lot more upside in my opinion, and they had a lot more challenges as well, right? The retail store count in Ontario and going from nothing to all, right? To servicing none of Canada to servicing all of Canada, was just a huge undertaking. Whereas the MSOs and the American companies are going state by state by state, so that when we do see federal prohibition lifted, they're going to be in a much better position. But like I said, their high prices that they're charging are not sustainable, because we know that it's probably going to be regulated like alcohol. They said that a couple of the Republicans said that they're going to try to regulate it like alcohol. We know that Chuck Schumer said that they don't want big alcohol and big tobacco companies running the space, but let's just call a spade here, and that's probably going to be what happens, right? We know that Constellations owns Canopy, a stake in Canopy. We know that British American Tobacco bought a stake in OGI. We know that Altria has a stake in Kronos. There's a bunch, right? Budweiser had partnered with Tilray. That's no longer a partnership anymore. But one thing you have to ask yourself is, why are all these companies partnering with the LPs? Why aren't we seeing these big alcohol and big tobacco companies partnering with MSOs? And I think that is because of the regulatory uncertainty, obviously. But I think that they may know something that the masses don't. And what I think that is the fact that they think that LPs have a lot more upside, because like I said, if the US legalizes tomorrow, who cares about MSOs being able to sell in Canada? No one cares about Canada. There's more people in California than there is in Canada, right? So if LPs have the ability to sell THC and to sell products across the border, LPs are going to absolutely insanely, their valuations are just going to insanely pop overnight, right? And like I said, the value is there long term, and more upside with regards to their business models. And like I said, the U.S. companies selling grams for $10 and $12 US a gram. That's just not sustainable. Like you can get an ounce of cannabis here in Canada from anywhere from $50 to $100. So that's just not going to fly, right? I bought the raindrops from Redecan, the CBD drops yesterday. It cost me $10 Canadian, and it'll basically last me for about a month. If I were to get that same CBD in the United States, it'd be probably close to $100, at least $50, but somewhere around $50 to $100. So it's just not a sustainable business model, in my opinion. But like I said, no company's perfect. The MSOs are going to have their own set of challenges, and LPs have their own set of challenges, right? That's why I think they both have places in our portfolio, but you shouldn't just own HEXO. You shouldn't just own Trulieve or Cureleaf. Maybe you want to pick up a ETF. Maybe you want to invest in other things like crypto, albeit the crypto could be entering a bear market soon, so I'd be cautious on that one, given how much we run. Maybe you want to take, real estate. That's something that I personally have been getting out of real estate in the eastern coast of Canada because of how much it has skyrocketed in the last couple of years. And now I'm focusing on Western Canada. So the Edmonton and Alberta market specifically, purchased a condo for $70,000, a condo downtown Edmonton for $70,000. Where do you can buy a one-bedroom condo downtown in any city for less than $100,000, right? So I'm just going where the opportunities are. MJ's, could be months, could be a year before we really see a major reversal, but I'm willing to wait. I have multiple investments. Even my father, I did a video on my top 5 cannabis holdings. You can check that out. But he bought 5 MSOs or 5 American companies and 1 ETF, 4 American companies and 1 ETF, and then he bought 4 Canadian companies and 1 ETF. And he's up over 10% from those lows that he bought a couple weeks ago. And that was his first time ever buying cannabis, and he's holding until U.S. legalization. He's not looking at the media and these FUD articles. He's not watching my videos. He said, okay, this is the amount of money in my net worth that I'm allocating to MJ. I'm not touching it until the U.S. announces legalization. That's just as simple as it can be, and to just tune out all of mainstream media, because that's what they do. They try to hype hype you up as much as possible when we're nearing all-time highs. They try to get you to think that there's never going to be a pullback ever again, right? And we're going to 100 on Canopy. And then when it gets down here, it's just FUD after FUD after FUD and article after article about why we shouldn't be even considering owning these companies. And you just have to ask yourself why that is, right? Generally, if you do the opposite of what mainstream media tells you to do or is hinting you to do, then more often than not, you're light years ahead of the pack. Is it harder to manipulate with a higher share price? It's a good question, Early Hunter. Well, the higher the share price is better because institutional investors may not be able to own it. There's other types of hedge funds and mutual funds and things like that that have that limitation. I think a higher share price is good. It's just, you can't always be doing reverse splits. You can't always be relying on that. But again, HEXO isn't the first. They're not going to be the last. We know FSD Pharma went through a huge reverse split. Aurora did a 12-1. There's no talk of Aurora, falling off the face of the earth anytime soon. Personally, I don't own Aurora. I'm not bullish on it at all. I'm not bullish on CGC. I really think they're going to struggle over the next couple of years and months. But not to say if CGC couldn't go back to $20 in a hurry. It absolutely could. But personally, I'm invested in companies that I believe in, that have strong fundamentals, that are on a path to profitability, and that have products and brands that people love. And HEXO is not even a brand name, a household brand name yet. And a lot of people still don't even know what HEXO is, right? And it's number one. So just wait until the media gets activated and switches from this bearish stance into a bullish stance again. Next time we get back up to the 52-week highs, instead they're going to be telling us how it's going to $1,000 a share, right? We're going to get back up to the 52-week highs, and they'll be trying to convince everybody that it's going to 1,000, and everybody and their dog will turn bullish, and then we'll get a dip again, and then they'll start scaring people. Remember when they said back before Canadian legalized, right around when Canopy got that investment from Constellation, they were saying how if you owned cannabis stocks, you probably won't be able to travel to the U.S. There's all these things that they come out with to get us to sell our shares and to get emotional, right? And that's why I encourage a lot of people, if you're looking at this from an investing perspective, you're not constantly looking at what the media is saying and what people are saying on message boards. You're saying, okay, I'll reassess this. Maybe you look at it in a couple of weeks, a couple of months. If you see some major changes out of an annual general meeting or something like that, maybe you want to take a look at what the changes are. But personally, I wasn't completely, off put by anything that's really going on. I kind of anticipated more dilution. I didn't see the reverse split coming, but it kind of makes sense when you think about it. They reversed from an 8-1 to a 4-1 in October of 2020. So they're probably kicking themselves a little bit, wishing they wouldn't have done that. And even if they did another 2-1 or 4-1, it wouldn't be the end of the world, in my opinion. Again, I was a little off put, just like a lot of people, that it said 14, as high as 14. Obviously, I wouldn't want that to happen, but I'd be okay with a 2 or a 4-1 reverse split. But again, we just don't know, right? It's hard to say. It's definitely being manipulated, though. You don't just see that HA FUD, the Hells Angels FUD, and all that stuff come out, when we're at 52-week lows, right? And the whole sector is bearish. Again, if HEXO, believe me, if HEXO were at this position all by itself, if they were the only company struggling to maintain its listing requirements and the potential for reverse splits, they're not the only one who's struggling with profitability, but they have a better path toward profitability than a lot of LPs. Even BNN Bloomberg said HEXO could do it this year, and Tilray, while Canopy and Aurora and all the other major LPs are going to take a lot longer. So again, HEXO, in my opinion, has a lot of upside. And again, if HEXO were the only one at all-time lows and 52-week lows, I'd be a little concerned, right? Maybe I'd be looking to take a little bit off the table and de-risk a little bit. But just with everything that I'm seeing in the sector, there's no major red flags here. And like I said, I'm seeing a lot of bullish catalysts coming down the pipe. Sycamore Style. I voted yes on anything except 5 and 6. Okay, cool. Good to know. Thanks for sharing. Jelly Bean, I am so confident in HEXO. I was confident for the past 2 years also. Hope the reverse split will bring us up. Well, I mean, the last time we reverse split, we went from like $2 to $11. So, it's not always bearish. People look at a reverse split, and you get the bashers and things like that say, oh, it's a reverse split is basically the definition of a failing company. But there's been many companies in the past who have had reverse splits and then went off to do great things, right? And then HEXO did a reverse split a year and a half ago. Then they reduced it from 8-1 to 4-1, and then the share price went up like 400 or 500% from there. So we should be talking about reverse split when it becomes a problem in 6 months or even maybe the end of December. Yeah, well, like I said, they have until July 25th, and that's not guaranteed that they're going to get an extension from the NASDAQ. They could get that extension, though. It's probably a high chance of that, Claudio, because of the fact that SNDL got its extension, but maybe they didn't want to rely on that. And it also has to do with getting the votes to approve it, right? When there's a reverse split, they need, so that could be part of the AGM, right? Or else they'd have to wait until next year, more than likely. And they're not 100% confident in that. And then if SPY in the broader market enters a bear market, you kind of have to ask yourself, right? Like, again, that's why I say try to put yourself in HEXO's shoes. So if you were running HEXO, what would you do if the S&P 500 was on the verge of confirming a downtrend on the weekly time frame and the monthly time frame? What if we enter a multi-year bear market on the S&P 500? You kind of ask yourself as the CEO, well, maybe I kind of have to plan things a little bit differently with the reverse split, right? Maybe it becomes more than just HEXO or more than just the MJ space. There's a lot of things to factor in. So let's just, for example, a hypothetical, Claudio, to kind of prove my point here, or not really prove a point, but to kind of explain where I'm heading with this. If HEXO didn't do a reverse split, and then come July 25th, they're hovering around $1, and then the S&P 500 enters a brutal bear market, and we drop to like 300 or below on the S&P 500, right? And we go back to like levels where we were. Maybe we go back to the previous all-time high. Let me just bring it up. But let's just say, and I even did a video saying, is it similar to the .com era? If that is the case, we could easily drop to 300, in my opinion, on SPY. And look where we were just at 218 in March 2020. So up 120%, 125% almost on the S&P 500 from the lows of March 2020. If people don't think we can't drop to 300 or like 400, easily drop to 400. We do have a higher low here at the monthly at 319. So really, we don't have any monthly support until EMA 26, which is there at around 393. And then the monthly higher low there at 317. Now that's just the monthly time frame. But we know that if we confirm weekly downtrends on the S&P 500, what happens if HEXO is so close to gaining that compliance, and they're getting over $1, and then SPY rolls over into that. Maybe we bounce around here, we form a lower high, and then we come down, and then we confirm a weekly downtrend and a brutal bear market. And then HEXO was so close to regaining that compliance, but because it had nothing to do with them, just the broader market started to enter a bear market. That's likely going to hurt MJ stocks in the short term. Maybe that prevents them from getting that listing requirement again. Or maybe they get an extension, and the S&P 500, maybe they get an extension until Christmas, and the S&P 500 enters a 1 to 2 year bear market, which could happen. Well, then they've got their extension, and maybe they could propose another reverse split then in December. But it's really banking on, is the NASDAQ going to give them an extension? It's not all about share price either. So again, I mentioned that earlier in the video, in the live stream, that it's not, a lot of people just think of, a stock's getting delisted because of X, or it's not going to get uplisted because of X, or it's not going to regain its compliance because of this. it's more than just the share price. Everybody just looks at that $1 and thinks that that is, you know, the main thing. That's one of the main things to consider. But there's also other factors. Just Google the NASDAQ listing requirements. But let's just go back to the .com bubble, right? Back here. So this is when, again, the media was telling everybody, buy internet companies. If they deal with the internet, buy them. We're going up over the next 10 years. And they were right? They were right. Over the next 10 years, we kept going up. They weren't lying. But what they didn't say is, oh, we're going to drop everything 90 to 100, almost 100% first, right? So they suck you in, and then they tell you, oh, you know, and I see a lot of people saying, oh, Tesla is going to be worth X. It's going to be worth over 10,000 a share in 10 years. Well, while that might be true, don't you think that maybe it might drop 40% or 60%, and you could get a better entry? Same with the S&P 500. They were telling everybody that the .com, you know, back in those days, you know, just buy, throw a dart, buy, hold. It's going to be worth way more in the future. And then we went on a brutal 50%, 60% correction in the broader market, right? We confirmed monthly downtrends. And how long was that bear market? So we had the top here in March of 2000 and the bottom here at October 2002. So that lasted about 2 years. And then here from the lows, we confirmed a monthly uptrend. But then we actually ended up losing that low of 77. So from the highs, we were down, like I said, almost 60%. And then that's when we went on an absolute tear. And really, since, if we just go back to, yeah, we haven't really confirmed a monthly downtrend. We had I guess 2008 was the last time. So we've been on a bull run really since 2008, right? And that's why I took the fractal from this run up in .com and I overlaid it. We'll just do it right quick here. Where do we go here? Should have brought up the video. Anyway, I actually won't get into that just because we're getting a little long. We're already coming on an hour and 20 minutes. But essentially, if we just take a look and then potentially see what we could expect the next bear market, right? We were on a bull market for many, many years, right? About a decade. And then it was a 2-year brutal bear market. And then we even went as far as losing those lows a couple years later. And that was the low of 2008 with a financial crisis, right? And then since then, we've been on an absolute tear. So we've been in a bull market since then. So again, we're higher than we've ever been. We've been on arguably the longest bull run ever. And what happens if we enter a 2 to 3 year bear market, right? So HEXOs, they could just be worried that the S&P 500, which is a possibility, right? Like this absolutely could happen. We could see stocks drop for the next 2 to 3 years. At least a year, in my opinion. If we enter a bear market, I think we're going to see at least a year to 2 years. I'm thinking at least a year, maybe even as high as 2 years. So it's hard to say, Claudia. Like we can, as retail investors, we can kind of, you know, look at it at face value and make our own, you know, have our own perception and view on it, but there's a lot more that goes into it, and that meets the eye. And this is one thing that I've learned a lot about the financial markets is you really learn a lot about how the world works. It's a great way to learn how to be patient, learn patience, and you know, just critical thinking for the most part. Because yeah, after a week of looking at charts and trying to understand what whales are doing, what the media is doing, trying to get you to think, because I'm a very contrarian investor, right? When the media is pumping one thing, I'm usually doing the opposite. When everybody thinks that crypto's uncool, I'm buying, right? And then when everybody and their dog's buying Dogecoin, no pun intended, you know, that's when I'm getting skeptical, right? When Saturday Night Live skit came with Dogecoin and Elon Musk, I was telling everybody to get out and run for the hills, right? And then it went from like 75 cents to 11 cents or 10 cents. So again, I get a lot of heat for being bullish on things when they're bearish. and being bearish on things when it's bullish, because people don't want to hear that, right? They want to just be told it's going up forever or their investment is sound, and I'm at a $4 average. Right on, Jelly Bean. Cool. Yeah, I mean, like, you got to feel for people that have a $10 average or a $20 average. But again, I see a lot of people bashing, oh, it's HEXO's fault. They should be, they should be put behind bars. This is robbery. But again, everybody's saying the same thing. I run a community over 10,000 people. Everybody's saying the same about Canopy. There's even people saying the same thing about Tilray. Oxley, I got people saying, oh, they only invest in a stock that goes down, and here we are up 50%, right? So CWeb went from $1 to $2 in like a couple weeks. I called it out on January 28th, saying, I said to private Power Group members, CWeb's a screaming buy on January 28th, and then it went up 85% from my call out, and up about 100% from the lows at $1 in just a couple of weeks. Like, things can change in a hurry. And this isn't something that we see usually when we're expecting more downside in a cycle. Usually we see the bear cycle come to an end when stocks start pumping 50 to 100% in a matter of days and weeks, right? So we're starting to see those signs that we could see a reversal in the space, but again, not going to be 100% confident until we change weekly trends and monthly uptrends. $1.14 average here with 21 shares, adding since $4. Nice. Congrats. That's a great average, and I'm sure a lot of people listening would love to have that average. And that's something you got to keep in mind too, right? If someone's buying for the first time here, are they nearly as upset or concerned with HEXO as somebody who bought at $10 or $20? So I understand that, you get these people, they may not just be bashing for the sake of bashing. They bought at $20 or what have you, or $10, and they might be new to investing, right? But the thing to remember here, folks, is there's always ways to get better, and you can look at it and you can play the blame game. You can try to point fingers and say, okay, well, at the end of the day, I bought into the hype, right? Maybe I didn't study charts enough, or maybe I didn't look into what happens when a stock runs 10x in a very short period of time. Maybe you don't want to listen to what mainstream media tells you, or maybe you can do a dollar cost averaging and know that when you buy something, there's a good chance that it's probably going to dip below where you bought it at, unless you're day trading or swing trading and setting a stop level. But if you're investing, these are all things that you can get better at, and just knowing how to identify cycles, bull and bear markets, where we're at in a given cycle, how to gauge the broader market as well. Those are all things that can help you with buying decisions and selling decisions. 70K. 70K. Oh, you must be referring to the condo. Yeah, $70,000. Again, everybody. Okay, so when I tell you that a condo in Edmonton is $70,000 for a one-bedroom downtown, that condo that I bought for $70K sold in 2007 for $239,000. That's a lot of money back in 2007. And then that same condo that I bought sold for $200,000 in 2011. This year, I bought it for $70,000. So if you factor in inflation and the purchasing power of the dollar, the Canadian dollar, over the last decade or what have you, that is a huge drop. Like, it's just a heaping pile of burning cash, right? That condo was for the two previous buyers. But my point is what do you think the narrative is with everybody here in Edmonton? Do you think people are bullish on real estate? No. Everybody hates real estate here, and they think it's the devil here, and they're like, don't even look at Edmonton. It's been on an absolute free fall for the last over a decade. And I'm like, well, that's what attracted me here, right? So again, I'm very contrarian. The same thing happened in East Coast of Canada. Nobody wanted to own real estate in the East Coast of Canada when I bought about 10 years ago. But then my buddy just bought a house 3 years ago. His house in Prince Edward Island is now worth over double what he bought it at 3 years ago if he were to sell it today. But he can't sell it because he needs a home to live in. But personally, I had bought a couple properties. I bought a house. I also don't have a family or anything, so I was able to, sell the house and relocate and do what I needed to do, maybe rent or what have you. But then I also had a duplex, a rental property. So I had some skin in the game. So I sold my house a little too early. But again, no one knows where the top is, but as long as you have some skin in the game. So everybody and their dog hated PEI real estate and East Coast real estate. I was bullish. And then when everybody started getting bullish on the real estate, I was starting to sell. I sold my house, but I still had the rental property. And then I ended up selling my rental property in the summer, which was about 6 months later. And I was able to get yes, I would have got way more money if I held on to my house, but how would I have known? No one knows, right? But now prices are starting to come down in the East Coast. And I think over the next few years, it's going to be in for a whole lot of trouble. So of course, I don't want to sell high and buy high. So then I started looking at other markets like the Edmonton market. And I said, okay, everybody and their dog here is bearish on real estate. I'm going to start buying it, right? And I mean, for $70,000, how can you really go wrong? I did a video on it though, Jelly Bean. Just check out my next big investment, Edmonton condo market. And I do a video explaining on some comparisons and stuff like that. Team HEXO, let's go. TAACD, yeah, you bet. You bet, my friend. JT just joined. Have you talked about Truss partnership yet? Thoughts? Yeah. And some people might have thought that was Trust. No, it's not Trust the company. It's Cann, C-A-N-N, and Truss, Truss Beverage Co. So this is a company that partnered with Truss Beverage Co., a joint venture between Molson Coors in Canada and HEXO. So yeah, essentially, JT, anybody in Ontario can buy these canned beverages through that partnership with Truss. So Ontarians are going to be able to purchase canned beverages, and it's coming to BC next after Ontario, and then a bunch of other products after that. So yeah, I think this is something that a lot of people didn't see coming at all. And we know that we could see entry into California. We know that the CBG partner production is already underway, and they're working on the product lineup. So there's a lot of bullish catalysts and news events that could come. It's just a matter of when, not if at this point, in my opinion. But yeah, there's a deal that was signed between, I don't think this is, there was some speculation that GTII, so Green Thumb, had a deal with Cann to bring beverages to the California market. Some people were speculating whether or not Green Thumb and HEXO are going to merge. That can't happen right now, given the current regulatory landscape. HEXO can't be listed on the NASDAQ or the NYSE and have operations in the US. And yeah, so that's why we see these US companies listed on the Canadian Stock Exchange and things like that, the OTC markets. But yeah, there was some speculation that maybe Green Thumb and HEXO were merging. I don't think so. I think this just might be completely unrelated to that. But yeah, we'll keep an eye on it. I think that's a great partnership, though. Actually, can't remember who it was in the Power Group community, but they were there. I think a couple of people brought this up in the past. We've been following Cann for a while. I love listening to this guy. It's like talking with him around a beer or two. Yeah. Thanks, Jelly Bean. I'm drinking a Bedfellows Indie Pals right now, the 10 milligram from Truss Beverage Co. It's fantastic. It's like an IPA. I did a product review video on that too. You can check that out, Bedfellows product review. They have the Hossmates as well. That one's really good. It's like more of an APA style. Not Truss, Cann Beverage Partners. Yeah, I figured, JT. Yeah, best to clear that up for anybody listening. I don't want any comparisons to them whatsoever. Keep up the good job, Rod. Thanks, Shane. I appreciate it. Maybe I will buy a little more before the reverse split. Yeah, well, we could see a little bit more downside. Like I said, we could easily see a back test of about 60 cents USD, I think, on HEXO. As long as we maintain 57 cents USD, though, and 73 cents Canadian, we're going to remain in a daily uptrend. Yeah, condo for 70K. Okay, yeah, I figured so. Yeah, it's insane. There's opportunities everywhere, right? And that's why I kind of tell people, you don't want to just be too honed in on one company. That's why, maybe diversify a little bit into other US MSOs, not just HEXO, right? You don't want to over diversify either. You don't want to stretch yourself too thin. But maybe 5 to 10 companies, and then you also have some real estate. But again, I've seen a lot of people, again, getting that FOMO mentality, right? The media saying, oh, rents are going up, making it harder to save for a house. And the supply glut, there's not enough houses to go around, and people are offering over 20% of the asking price. And then people are getting FOMO, just like they were getting FOMO in MJ stocks, right? But it's just in a different industry. But the media is doing the exact same thing. They're painting that narrative, saying that there'll never be another opportunity. And it's just going to keep going up and up and up and up. As we're nearing the top of this everything bubble, in my opinion, I think we're going to see a huge collapse in the financial markets over the next couple of years. Again, not to spread FUD, that's just what the most likely scenario is going to happen, is probably going to happen. And then, yeah, if we look at the narrative that it's saying, a lot of people in my network of friends were buying houses over the asking price. And they say, if I don't buy a house now, I may never be able to afford a house. And I'm like, man, that's a dangerous investing strategy. Or like buying a house is not really the greatest investment, especially if you're going to live in it. Again, I'm not saying don't buy a house. I'm just saying there's a lot more that goes into it, and there's other opportunities, like case in point, the Edmonton market. But not everybody wants to live in Edmonton. I get that. But maybe if you're looking at buying a house, one option could be, okay, well, maybe I won't FOMO in and overpay for this house. Like some of the prices that people are asking for homes on the east coast of Canada, I'm like, you gotta be kidding me. Like I would never pay that ever. Like I don't think I just wouldn't. I'd rather rent, and then I would look for other opportunities. So let's say I didn't want to live in Edmonton and I wanted to buy a home. And I lived in the east coast of Canada, but I didn't want to move to Edmonton, the western coast of Canada. And, Vancouver's too expensive, so I didn't want to live in Edmonton, too cold, whatever, right? Maybe I buy a rental property in Edmonton, and I say, okay, with that, maybe I buy a condo downtown, for example, and then in 5 years, when that condo hopefully might double or triple, right? Maybe I use that profit and those proceeds to fund a down payment on a house when hopefully by then the market is cooled off, right? Again, no one knows. Or maybe you want to buy a couple properties, right? Maybe you're in Edmonton and you buy a condo to live in and one to rent out. And then that way, you got your own residence, and then you've also got an investment property similar to what I did with the East Coast properties, right? So it's just about diversifying and knowing that, when there's FOMO, it's probably not a good time to buy. And when there's fear and a lot of uncertainty in the market, that's probably when you want to buy. But people don't like when things are down. They want to feel good about their investment. Good point. No stock will go up forever. That's what I did wrong last February. Didn't sell when I should have been. Played long. 490 average. Yeah, well, don't beat yourself up too much, Shane. Like I said, I was selling back into that run up to $11. I didn't see $11. I think I was all out by like $9 or $10 USD. And then I started to buy it back around like $7. And then I went pretty heavy at $5. And then, like I said, when we lost $5, I think I even remember doing a video on it. I said, if we lose $5 on HEXO, that's going to be bad, because we had this huge reversal down from $11. And if you actually remember, HEXO was actually performing a lot better than some of the other names. Like CGC was, just look at that pullback in a couple of weeks on CGC. We were down like 51%. And HEXO, it was actually holding up pretty well. And then we just kind of followed suit, 50% pullback. Then we had a huge bounce. CGC didn't have that huge bounce really. We just pulled back like 50%. We had a little bit of a bounce, but not nearly as big of the one on HEXO. It jumped about 25%, but then HEXO went like almost 60% on that bounce, and it was performing a lot better, actually. It hadn't confirmed weekly downtrends. CGC and Tilray confirmed weekly downtrends first. HEXO was performing a lot better, So then it just started to follow suit. And I said, after that pullback to $5, when we had this run up to 753, then we had that double top after earnings at 755. We were looking for the cup and handle. And I said, if we come down here and we roll and lose $5, that's not going to be good. And, everybody back then was saying, oh, the bottom is in at 5 after we ran up to 750, but then double top, cup and handle fail. And then, once we lost $5, I exited a bit of my position. And then I started to enter some of that position back in that I sold around $4. So I just kind of lowered my cost basis a little bit. Granted, I really didn't expect it to fall this much, right? But, I just kept dollar cost averaging, bought a bit more around $3, bought a bit more around $2, a bit more around $1.75. I just kept buying it every couple of weeks, just averaging in. And now I've got an average of about $2 after selling back here into, 7. I started to sell around between $5 and $9. And then, after we saw that drop, a lot of the ones that I sell at 9, I started to enter back in at 7, right? And then again, I'm down quite a bit on, I would have been a lot better off if I just sold at 11 and then waited until now, right? Obviously, I would have had a ton more shares. But again, there was opportunities to unload and then reload cheaper. Again, having a dollar cost average strategy, knowing that it can always go lower and even lower than that. If you think that's something that can't go lower, it absolutely can, right? And this just all comes, you can beat yourself up over it. Oh, I should have did that, I should have did this. But at the end of the day, no one knows. And as long as you're buying near the bottom, that's really the main thing, right? It's like my analogy with the house. I had a house and a rental property. If I didn't sell my house when I did, I could have sold it 6 months later when I sold my rental property. I could have made a lot more money off that house. But like I said, no one could really know. And then we even had a bit of a pennant that was forming here, just ignoring the wicks. And you can see here that we were bouncing in around that, and we tried to break out. Like I said, double top, and then we rolled over. And as soon as we lost that $5 area, that was the signal to jump ship if you're looking to at least reload cheaper. But there's a lot of opportunities. And again, if you look at any chart right now on the monthly time frame, there's actually some worse looking charts than HEXO. But let's look at CGC. Like, that's got to be the most ugliest chart in the history of charts, right? 56 all the way down to 664, and just month after month after month after month. We had that small relief rally here in the month of November, but essentially we're going on 13 months in a row. We're finally seeing a green month here. And we have resistance from the previous months at 964. We got as high as 961, so we're essentially a double top with last month's high. If we can get back above that resistance, we've got a lack of resistance on CGC up to 1596. So this is what we want to see, is the monthly bounce get underway, weekly trend changes and weekly uptrends confirm. And then when the monthly bounce gets underway, we're going to scout monthly uptrends where we see a higher low and higher high. And maybe you're waiting for the monthly uptrend to get into MJ, right? But by then you could be looking at $20 CGC, right? Are you okay with waiting? Like, there's so many different game plans, right? It just depends. Are you aggressive? Are you conservative? Are you less aggressive? Are you less conservative? Are you retiring in 5 years? Or you're retiring in 50 years, right? There's a lot of things that go into that. I hear people say all the time, well, I'll just sit on the sidelines until we confirm weekly and monthly uptrends. Nothing wrong with that. But then you see them and they're like, oh, well, I don't want to buy now. It's too high. And you're like, well, what did you think was going to happen if you waited until weekly and monthly uptrends, right? Obviously, we're not going to be able to confirm a monthly uptrend and a weekly uptrend unless we have a huge bounce, followed by a higher low and a higher high. So if we were to see a monthly uptrend, we would need to have a big enough a bounce to form that higher low and higher high. There's a good chance that we could be at $15 to $20 by the time you get an entry, which is fine. Maybe you say, okay, I'll enter when that monthly uptrend confirms, even if it's at $20. That means we could still see another almost 200% of upside. again, it's not right or wrong. It's just, just different investing styles, really. But in MJ and in crypto, just imagine, like, for example, these are something that I compare a lot of the time is crypto and MJ, because they're the two most volatile asset classes on the planet. And yes, they explode massively to the upside, but they also see 80 to 90% corrections, which is just not, a lot of people don't have the stomach for it, right? So if you're investing in MJ and in crypto, well, just be aware that crypto is probably going to drop 90% from its all-time high. So Cardano at its high at 316, it could easily drop back to 25 cents, 20 cents, and see over 90% correction, like easily. But just look at Cardano, one of these cryptos. This was a crypto that I was following in the bear market. Imagine if you were just dollar cost averaging, even all the way from 10 cents, you bought a little bit at 7.5 cents, you bought some at 5 cents, you bought some as low as 1 cent. I mean, how doom and gloom was it on the Cardano chart here when it hit almost just under 2 pennies? So 0.018. And then all those people who were dollar cost averaging, and then we went up and ran over 250x from the lows of March 2020. Even if you just go to the low here of October 2020, how many months? So in 11 months, in about a year, you would have seen about almost between 35 and 40% or 40x of upside. So that $1,000 investment would be worth, between $35,000 and $40,000, right? Those are huge gains, and you're not going to see that unless you're buying near the lows, right? If you waited for monthly uptrends, okay, on as an example on Cardano, you said, okay, we have the low, we have the high here at 15.5 cents. Oh, we have a higher low here at 7.5 cents. We're working on a monthly uptrend. We're holding the EMAs. Okay, 15.5 cents. Yeah, that's an awful lot higher than it was just at a penny there a couple months ago. They get so many people who say, no, I'm not okay with buying at 15 cents. I'm going to wait for a dip. And then you'd be correct in thinking that, okay, we hadn't confirmed the monthly uptrend. And then it gets down to 7.5 cents. And you say, okay, going to buy, scouting that monthly higher low off the EMAs. That's one way to do it. Or you could be super conservative and you could say, okay, well, we're forming that higher low, but we have yet to confirm the monthly uptrend. So once we break resistance at 15.5 cents, that's when I'll enter. And then that candle would have been right here in November, a few months later. So as soon as we close the candle here we closed at 17.2 cents. So we had resistance at 15.5, we closed at 17 cents. Boom, signal. Monthly uptrend confirmed. If you just entered there at 17 cents, granted, from 1.8 cents all the way up to 15, it already bounced 13x, right? You missed out on 1,300%. If you would have bought at a cent or 2 cents, you would have, if you put $1,000 into it, you'd have about 10 to 13,000 just a couple months later. But again, if you waited for monthly uptrends, you still would have seen over 10x, right? If we just dim that down here. So if you waited for that monthly uptrend to confirm, you were still looking at 18x, right? That's almost $1,000 into $20,000, right? So there's so many opportunities, and now it's just kind of the similar thing with HEXO. Are people going to wait for monthly uptrends? Are they going to wait for weekly uptrends to confirm? Are you dollar cost averaging? Are you aggressive? Are you buying, each new low? Are you investing in more than just HEXO as well? So definitely a longer stream today. Didn't anticipate it to go this long, but great conversation, everybody. Hopefully this is helping. Jelly, I don't know what you consider a little more, but you may want to wait until March 16th when the Fed tells everyone what they plan on doing. Yep, that's going to be all eyes on interest rate hikes for sure. Can we elect you for the board? Thanks, Jay. I appreciate it. I wouldn't say I had the experience necessary to be qualified, but you never know. Maybe someday. Yeah, a lot of the economy is in for some stress tests while battling inflation, recession, wages, and employment. Yep. Well, recessions is where opportunities come, right? And and cash is sort of king at this point. But again, as long as you have some cash in the reserves, you're not going too heavy into MJ, and just have that realistic expectation that we could drop a bit more. Or if you're not okay with another drop, maybe you set a stop loss. If we lose the daily uptrend on HEXO, or any of these names like CGC, maybe you want to, sell at least some of your position if some of these names lose their daily uptrend, because then that means that we could see a bit more downside. But just remember that once we do see the daily uptrend lost, that's going to indicate that weekly consolidation is underway. And then that's usually when a lot of people get faked out of their positions as well. And they say, oh, it's just another pump and dump and fake out. But just keep in mind that if we lose the daily uptrend on CGC, for example, that just means that we're coming back down for a weekly higher low, and that bulls can attempt a weekly trend change. So while everybody think, oh, we're going to new lows, it's entirely possible that we set a higher low here compared to the low and then change the trend, and then we're super bullish all of a sudden, right? So that could happen as well. No one has a crystal ball, but like I said, I sleep well at night. Obviously I don't beat myself up for not for buying too soon, or not selling late enough and then waiting long enough to buy. It's so hindsight's so 2020, right? I mean, we can look back now, but no one could have ever anticipated that would happen. Agree on FOMO real estate. Crazy if one falls for it, then there's FOMO plus FOMO. Yeah, FOMO squared. Fun.fyi. I'm not sure if that's a bot that we got in here or something. You're welcome, Shane. Yeah, apparently we got a bot here in the chat, typing all kinds of spam. All right, so I see we have over 40 people still on the stream. That's amazing. You're an absolute boss if you're still sticking around. And like I said, hopefully that helps. I know we went over quite a bit today, and I kind of went off on some tangents, but yeah, you just gotta kind of sit back and wonder why all the media is so bearish when we're at all-time lows, and then why is it always so bullish when we're at near 52-week highs? It's because when the whales and the big financial institutions and the market makers are buying, they want you to be fearful because they're greedy. So the way that they get cheap shares is by making the masses fearful. But as we know, when there's fear in the markets, we should be buying, just like Warren Buffett said. And then whenever the market is euphoric and we're reaching 52-week highs, that's when, the Globe and Mail and BNN and CNBC are all saying that cannabis is, the valuation of global cannabis is going to be over $300 billion worldwide in 5 to 10 years. And, all these stocks are going to 100, and, the Amazon of the MJ space, we were seeing that. And when things were at 52-week highs, and that's because they were selling. They need to get new people in to sell their expensive shares, right? And then that's when we get a reversal, and then they just rinse, repeat, do it all over again. You're welcome. XLY, next resistance? Great question. I think it was, bring it up here, 22 cents if my mind remembers correctly. Whoops. Yeah, we really don't have any clear resistance until 22.5 cents. We closed at the high of the day today. Again, like a lot of the investors, I did a Oxley video, and there's comments on, I think it was from a group actually. Can't remember if it was on Reddit or not, but essentially they're like, oh, I only invest in a stock that goes down, and I'm getting out, this thing is going lower. And I said, well, the video basically was saying that we could go lower, but I'm buying. And I took, a couple of positions in XLY. I've got an average of about, I'd say I'm probably right around my average right now, around 19 cents. But I bought, I think, some at 20 cents, and then I bought some the other day. I filled at 15 cents. And I said, we're right on 13.5 support. After that, we have support at 12 cents from back here in September. But didn't mean we had to go there, right? And I guarantee you a lot of people were fed up, right? Because a lot of what XLY, Oxley investors were saying was, look at CGC, it's in a daily uptrend and seeing a huge reversal. But look at XLY, we confirmed the daily uptrend and then we just gave it all back into 13.5 cent support. And then, like I said, a lot of people were bearish, and I bet you a lot of people probably said, that's enough of this, I had enough. And then, bam, 2 days later, it's up almost 50%, over 42% in 2 days, right? So a lot can happen. And again, these are signs that we're looking for at the end of a bear market. We also need a lot of volume, which we're getting tons of volume on some of our US names. Even some of our Canadian names are starting to ramp up in volume. But look at CWeb. There's another example. Look at that volume coming in. This is what you start to see at the end of a bear market, where you just rocket up 100% in a couple weeks, right? And this is when I called CWeb out of here on January 28th. I said, hey, everyone, this is a screaming buy. I can't believe we got as low as $1.02. That was when we had the news coming out about CBD potentially preventing, and that's come out a lot of times, but now we're actually like seeing more clinical trials and things like that. And I said, here we are coming down, testing 102 support. It's basically a double bottom at 103. I said, this is a screaming buy with a stop below $1 even. So you buy that at the double bottom of 102, you set your stop at 99 cents. You never would have got stopped out, and you would have made up almost 100% in just a couple weeks, right? From that low, or even if you just did the double bottom right there, you'd be looking at 92% of upside in 17 days. So 11 trading days. Yeah, 22 cents on Oxley. Oops. And it looks like it wants more. Still nowhere near daily overbought yet either on the RSI. I can easily see it push up to above 20. Maybe we keep in mind though, we broke the daily downtrend, but we have yet to confirm a daily uptrend. We were in one here back on, like I said, that January 28th, actually on January 31st, that's when we broke to a higher high, broke that resistance at 16.5 and confirmed that daily uptrend. And then we lost support, lost the daily uptrend. Now we're starting the daily bounce again. We broke the lower high and lower low pattern, so we're no longer in a daily downtrend. But now what the most likely scenario is we come up, maybe we get as high as 20, maybe again, they like to FOMO people in, right? These are the times where things run and get a little heated. So I wouldn't even be surprised if we got a little bit extended on the daily RSI. We see an RSI 12 and 26 bull cross, top out around 21, 22, and then we form a higher low and then a higher high, change the daily trend. But I'd just be cautious right now on any entries, as we are getting close to resistance and we're still not back in a daily uptrend yet. But like I said, these are the times where, look how quickly we went from daily oversold to daily overbought almost, right? It didn't take any time at all. But yeah, after 22 cents, then we have a lack of resistance on the daily all the way up to 35 cents. I mean, we could zoom into some smaller time frames here on the 4 hour. Yeah, even really on the 4 hour. There's not much. That's why I'm saying that's why it pays to be more aggressive at these levels, in my opinion. And to just wait, just hold. And crypto and MJ, I just usually buy in a bear market and wait and sell in a bull market because it's just so volatile and it's easy to get stopped out and faked out. And you're not going to get those 50x returns or 100x returns unless you're buying, all-time lows, right? And buying mass amounts of fear. But yeah, one thing I highlighted as well, reset the chart here. So back here, we had this pennant that broke out. I think it was better seen on the weekly time frame. So what's going on with TradingView here at the moment? But anyway, so we had this pennant that broke out. If you actually take a look at the measured move of this pennant that broke bearish, if we take a look at that measured move from that high to low, it essentially put us right here at 13 cents. And then look what happened. We had a bear break to a bull break, huge bull trap, and then here we are, came back down and we touched that level. So the measured move when we broke out of that bearish was saying that we could potentially go as low as 13 cents. Took a while to get there, but we're finally there. And what's one thing that's standing out here, folks? What do we want to see toward the end of a bear market? That volume. That's huge volume, right? And yeah, that's what we want to see. We want to see huge bounces off the lows on big volume. So like I said, 50%, almost a 50% bounce in a couple days. CWEB 100% in a couple weeks on big volume. That's what we want to see. It's looking good. What are your thoughts on crypto miners besides them being tied to crypto? Good or bad? I'm not really big into mining, to be honest. I personally don't mine. I know a couple friends and stuff that do, but personally, I'm more into sustainable energy, and it's kind of like dial-up, right? Just because dial-up was first didn't mean it was the end-all, be-all, right? I kind of compare Bitcoin mining and mining in general to dial-up, right? There's cryptocurrencies like XLM and XRP that don't use mining, and are, you know, way more energy efficient than even Visa or MasterCard's current payment system. So yeah, personally, and we know that Ethereum is going to proof of stake, which, and if you haven't watched, there's a video surfaced. Can't remember who it was from now, but I'll see if I can think about it. But a couple days ago, Joe Lubin, the co-creator of Ethereum, basically he called Ethereum a toy and basically a prototype, and said that this was just a demo and a toy and a proof of concept. So basically, they knew it wasn't going to work long term, and then now they're coming out with ETH 2.0, or they're scrapping that name and they're coming out with a proof of stake. But if you know what proof of stake is, it basically rewards people for who hold the most tokens. So essentially, the rich get richer. Again, I'm not big on that. I'm not sold on that. And then Bitcoin's probably going to migrate away from proof of work eventually. Not to say that mining isn't profitable, because it definitely is. It's just personally not really something that I'm focused on. But I think that there's better ways to reach consensus than mining. And like I said, dial-up, comparing it to dial-up, right? Just because it was the first one and the first mechanism to solve the double spend problem doesn't mean that, you know, it's going to be the one that stands the test of time. So like I said, I'm just focusing more on cryptocurrencies that are environmentally friendly, that don't use these crazy amounts of energy mining. Average is about 15.5 on Oxley. Very nice average. Yeah, that's awesome, Shane. Like I said, I think my average is around right where we are right now, right around this 19 to 18 cent area. You're welcome. Thanks for your time as well. Invest in Energizer. Rod runs on. Rod, 2 hours. Yeah, we're closing in. Yeah, a little under 2 minutes now. All right, gonna wrap it up. It's been a pleasure as always. And like I said, the video, like I said, we kind of went off on some tangents there, but the video is primarily to come on and just to help people realize that, you know, the media is the way it is when we're in these brutal bear markets, and then when we enter a bull market and high euphoria, they'll just be trying to pump you up with as many good feel-good stories as possible to keep you as bullish as possible, when we should be flipping bearish. And to also say that HEXO has its own problems, right? There's so many companies, but look at Canopy, for example. Canopy's margins suck. Their market share sucks, right? Their products aren't very good. They're losing market share. Yes, they have great cash position and you know, all of that stuff too, right? But again, they all have their own set of problems. They're losing market share, their products, they're going through a complete revamp of their brands and their products. Whereas HEXO is just like coming out with amazing product after product. They're gaining market share, but the debt's a concern and the cash position is a concern. But again, these are all things that we probably should have saw coming to a certain degree when they announced they were paying $400 million in cash for Redecan. If we checked the books and they didn't have that much in cash, well, likely going to be debt or dilution. That, one of the two Ds. HMJU hit 160 last Feb, but crashed right after, looking at a reverse split 2, high risk, high reward. Yeah, so I mean, you can look at it and you can say, MJ's down 90%, but what did it do before it dropped 90%, right? They just get so caught in the moment and emotional, right, that it's they miss the opportunities, right? And that's why I kind of brought up the analogy of the real estate investment as well. If you're only looking at real estate in your own backyard, well, it's easy to get FOMO, right? But if you're looking at real estate at a holistic level and you're saying, okay, well, it's not just my market, it's real estate as a whole that's like crazy in a bubble right now, maybe I better hold off. Or maybe I better look at some markets that don't have crazy high valuations for real estate, right? Like that's another option as well. So absolutely. High risk, high reward, and just not giving in to emotions. And again, all of what HEXO proposed, we knew that the board of directors was going to be shaken up. We knew that another raise was potentially coming down in the cards because we know that they're going to probably be another 3 to 4 quarters before they reach profitability, and then another couple quarters after that before they really start to see some cash reserves, and then the cost-cutting initiatives that we've seen over the last couple of weeks and months and synergies and things like that and layoffs. That's all going to help with their profitability metrics. But that's going to take time, right? So again, how are they really going to fund operations and keep the lights on without raising again? And that's just something that we have to be realistic with ourselves on, and just know that it might drop again. The whole sector could drop. SPY could enter a bear market. We don't know. We don't have crystal balls. But as long as we know, as long as we set realistic expectations, that at the end of the day is going to be the whole world of difference. So. All right, over 2 hours. It's been a slice. Thanks again for joining us on the Pursuit of Wealth. If you could smash the like, subscribe to the channel if you're still sticking around. Over 30 people. I want to see 30 likes on this video. Please and thank you. I appreciate it. Now, if you think I deserved it, smash the like. I would really appreciate the support as always. Thanks again for joining us. It's Rod with Power Group. See you on the next video.